Hello everyone, it's Zicheng here once again. In today's video, I will be sharing my ultimate 1-minute strategy with everyone. It is a beginner-friendly strategy where it is simple to use and also easy to understand. For those that know me, I'm actually a pure naked chart trader where I don't use any indicators to trade. I only use Fibonacci, which is a tool and not an indicator. I will be making one video on how to use Fibonacci, don't worry. Besides that, I read price action and identifying key zones to enter trades. This moving average strategy is what I have used before and it works. So this is something that I want to share to the beginners out there. If you don't understand what is moving average, you can head to my previous video where I explained about what is moving average and how does it work. So I would recommend you to watch that video first before watching this video. As you can see here, this is a Euro USD 1-minute chart. So let's start and I will teach you how to apply the moving average onto the chart. So firstly, this strategy, we will be using exponential moving average. We will not be using the simple moving average. That was what I taught in my previous video. Exponential moving average moves faster compared to simple moving average as it can catch up to the price much faster. We will be using a total of 4 exponential moving average in this strategy. So if you are using TradingView, you cannot apply 4 moving averages at one time. Let's look. If I show you right now, if I use 4 moving averages, so we have the first one in chart and I add the second one. This is the second one, and if I add the third one and I add one more, this will come up because you need to purchase a pro plan to be able to insert 5 indicators. So this is the trick over here. What do is we remove all this, head over to the indicator section, type in 4 EMA. So you can select the first one. Now this is how you can see that you have 4 moving averages in your charts without having to purchase a pro plan, just by using the free plan provided by TradingView. So what are the settings? The first setting is 8, second is 20, third is 50, and the last one is 200. So let me type down the settings for everyone. 8 EMA, 20 EMA, 50 EMA, 200 EMA. So these are the EMAs you need for this strategy. Now, as you can see, we have yellow color, orange, purple, and blue. Well, the color is totally adjustable according to your preferences over here. This is the place where you can change your colors and also the thickness. But in this case, I will stick with the colors and just adjust the thickness. So I'll hit over here and adjust to the thickness. And after you are done adjusting your colors and the thickness according to your own preferences, click OK. So as you can see, the chart now has completely changed with a thicker line. So how does this strategy works? Very simple. If the price is above all the 4 lines, you find for buys. If the price is below the 4 lines, you take the sell. It is that simple. So let's look at some charts. We need to find a trending move. So this strategy works best if it's a trending move, and it is not suitable in a ranging market. So it is very important for you to do your back test and find out which is the best session to use this strategy. From what I have tested, it is good to use during the London session and also the New York session, as these sessions have a higher volume which cause trending moves. So as you can see over here, once the price have crossed 4 moving average, we will start to look for buys. But now the question is, where do we look for buys? You look for buys when the price decides to come back or pull back and retest at the moving averages. So what are the moving averages? If it comes back down to retest the 8, 20 or 50, we will start to look for buys. But when is the right time? It does not mean that when the price touches the 8, the 20 or the 50, you take the buy. This is when you need to learn up candlestick confirmations or price action. Remember this, indicators are not the key to everything. Price action is still the best. So don't worry, I will make a video on price action where I will teach you how to read candlesticks or any reversal patterns. So stay tuned for that and make sure you subscribe that video. So in this scenario, we can see that now, let's say we are here. Price remains above the moving averages, remains above all these moving averages. So now it has come back to retest. So let me just zoom in. It has come back to retest. And when the retest happens, we have a bullish engulfing at the retest. So this is a very good sign for us to take the buy. So we will take the buy here once the candle closes and place our stop loss below the last low. And look what happened. I will just target a 1 to 2 and we managed to get that 1 to 2. So let's move on to the next example. So price decides to continue to rally and rally. And as you can see over here, in this scenario, we have a long wick. We have a long wick, but there was no bullish engulfing. So there was no trade over here. And if we continue to move down, now as you can see over here, we have a retest, but there was no bullish engulfing here. Therefore, no trades. So we skip this. And now we are back to retesting once again. So now this round we have a bullish engulfing. So I'll decide to place a trade over here and place my stop loss below the last low. So my target will be 1 to 2, my risk to reward. And I'll let the price run and run and run. Look, it hit take profit over here. So now back to over here again, it decides to come back down and retest. Then next up, we have a bullish engulfing. So I'll place a buy trade here and place my stop loss below the last low. And my take profit will be 1 to 2 risk to reward. And look what happened. I managed to catch a 1 to 2 winning trade. So as you can see, it works very, very well in a trending market. So now let's look at another example of the buy market. So as we can see, price is very strong. It is ranging. As you can see, let's go back a little back more. So now price have crossed out of the moving averages. 4 moving averages, it remained above. So now price decides to retest. Okay, in this case, we will have a stop loss. Okay, we will have a stop loss because it came back down to retest and we have a bullish engulfing. So if I take a buy over here and I place my stop loss below and my risk to reward is 1 to 2, I will have stop loss hit. But this is when risk management comes in and you need to have a proper risk to reward and also your stop loss. We don't have a 100% winning rate over here. We only aim to sustain in the long term. That is what it matters. So this losing trade is fine. Let's move on to the next. It continues to rally up. Okay, now it came back down to retest, but there was no bullish engulfing. Now it moves down some more, no bullish engulfing. Now came down some more, no bullish engulfing. And finally, we have a bullish engulfing over here. But now the moving averages are below. As you can see here, price is below the moving averages. So this is not a valid buy. Next up, we have this over here. Now moving average is not fully crossed. So we'll wait for a little more. Now price is above all the moving averages. So it is now doing a retest. Now we have a bullish engulfing. Now another losing trade over here. But let's see if we manage to catch the 1 to 2. So the low, 1 to 2. Okay, everyone, we still managed to catch the 1 to 2 over here. Okay, this is why I recommend a 1 to 2 risk to reward in this scenario. So now it have moved down again. Price crossed back up all the moving averages. We will start to look for buys again. So no trades yet. Okay, now we have come back down to retest and we have a bullish engulfing. So I'll proceed to take buys here. Place my stop loss below the last low. Then 1 to 2 risk to reward. And look what happened. it has hit take profit also. Now let's move on to the next. Now price have came back down to retest again, and there was no bullish engulfing, so I will ignore this trade. Let's move on to the next. Came back down to retest again, there was no bullish engulfing, so move on. Push back up, and now we have a bullish engulfing, so we take the buy trade here and place our stop loss right below and target a 1 to 2. So we managed to catch the 1 to 2 again. Now price decides to come back down, and this is when we get another stop loss over here. Okay, we put our buy here and our stop loss below 1 to 2, but unfortunately we hit stop loss in this trade. But as you can see here, we managed to catch some profit already. So this is -1 plus 2, which makes us +1. Then we have +2, so total +3, -1, so we are still up +2. So this is why it is very important to keep a positive risk to reward. I will now proceed to write down the complete rules for this strategy. It is basically like a trading plan. So trading plan, firstly, what do we need? We need price to remain above all the moving average. Price to remain above all the moving averages. That is the first rule. Second rule, price to retest the 8, 20 or 50 EMA. That is the second. The third, now it doesn't mean that when price retests the 820 or the 50, we take buy or sells. We need to wait for engulfing or wicks. If we have long wicks, we can also take the trade. But if you are a beginner, I would suggest you to just wait for bullish or bearish engulfing. Take buys only when there is bullish engulfing, and take sells only when there is bearish engulfing. Next, very important, make sure there is no news releases coming up after you have taken the trade. No news releases. And fifth, make sure your risk to reward is 1 to 2. So this is the rules for this ultimate 1-minute strategy that I share with everyone. Now, if you have any questions, do not hesitate to ask me in the comment section, because I will be there to help you one by one. Don't worry about that. So just don't be shy, just ask questions. That's it for today's video. Thank you for watching, and if you are interested to watch me live trade or live analysis, you can head over to trading.live, where I do live streams daily. Please like, share and subscribe so you wouldn't miss out on the future videos. See you in the next video. Bye.